If Apple cannot hold here, then... Hey everybody, in tonight's video, we're going to be going through 10 stocks to buy for next week. We're going to go through some earnings. We're going to go through some shorts for sure, based upon current setups. And I want to do the indexes very quickly at the end. So make sure you stay. Make sure you subscribe to the channel and click all notifications, because what we go over here is extremely timely and you don't want to miss that. So I don't run ads. So if you could just simply click the like button, I sure would appreciate it. Crocs, we are all aware that they had earnings. I'm not going to say I don't know who's wearing them. Obviously, a lot of people are wearing these things, but you have this really nice base going on here. And all day long, you've just been pushing and pushing, even into it, you've been pushing. This is exactly the kind of behavior you want to see. If you just overlay some very simplistic averages, let's make this a 50, and we're going to make this a 20. We'll just do a little standard work here. Now, what we're going to notice is that both are consolidating at the same point. Usually this means that you're going to have some kind of EKG reading, as I call them, because you're just going to base for a period of time. This is basically saying the exact opposite, where you're breaking out in here. Now, there is really nothing in between here before you get up to this level. So you get to that 94.76. There's nothing really in here to stop this once it gets going. So this is definitely one that I would be watching as early as Monday. Now, if we look at this on the weekly, just focus on what happened. Well, we gapped down and then we closed at the high. Now, there's a couple key things to take away from this. The very first thing is, by standards alone, just the body is what I look for, but that is a bullish engulfing on a weekly. Besides being a bullish engulfing, take a look at this. You have this huge wedge that's formed. It's actually enormous when you look at it. And what that wedge is telling us, I'm going to use that ray right there. You see that channel? You're setting up to break out of that. But on top of that, all the way back to this little point right here. And you can see clearly that even as far back as February, we were rejecting that level when this was forming that bear flag, right? Forms a bear flag, then finally breaks it. What we're doing here is now we're setting up to even push. So getting above that, if you're looking at this just from a weekly perspective, it gets a little goofy on where this could get to. So you could even see this trade up to 102. I always like these bars, earnings or no earnings, where they encompass a couple weeks. This bar on a weekly chart encompasses a couple months. So that's exactly what we're looking for. SCCO is a copper company. Now, I like this chart better than FCX. We're all aware today that the commodity index really just kind of caught on fire, and there's a couple more commodity names in here we're going to go through. I think this is pretty fascinating stuff on how we reacted here and how this is breaking out. Now, if you just kind of go back and take a look at a couple core things. Number one, you can see that wick right there. Number two, if we get rid of that wick and just take a look on the base from here over, this was a bone of contention for a long period of time. Even going back to here, we only got over it once with no follow through. Again, no follow through. Today, we just gapped over all of it. I use a 20 SMA line on my volume, and see how it's increasing? See how you're filling in more of that and how these bars are getting longer and longer even as this goes higher, right? That's what you want to see. So I like this. Now, if you just take a step back and look at it on a weekly chart, that's the great thing about the week, you can kind of get another sense of it. You can see this curl right here, right? You can see this downward trend line, which was basically had us trapped for months. We break above that. You need to make a higher high. We've done that. So this can push. Now, how high? It really is all going to depend on what happens with commodities. But commodities are setting up to move higher. Frankly, that's what happens when you start seeing inflation hedges. They move into commodities. We're seeing it in the oil names as well, which we're going to go over a couple of those in tonight's video. But we could get back up to this $64, $65 range. I would not rule this out at all. I would keep this on my watch list. Now, Starbucks has been a heavily shorted stock and one that I've stayed away from. And I don't know that we're there yet, but you need to have it on the list so that you're aware. So long-legged dojis are signs of uncertainty. Okay, you basically have a battle going on. Wicks are price rejection, and the longer that these go on, the longer the battle. So when the battle is finally decided, the length of the move is usually a minimum of the length of the doji, right? Just something to remember. Now you run right up into it and then you stop. All right, well, I don't know that that's the end of it, but what's nice about this, we might be able to consolidate for a couple days. Now, if we can consolidate, put a bar here, put a bar there, form a flag, and then break out, we could put a lower price for a stop instead of utilizing this, right? Right now you're at about 90.50, so you're still going to lose about $1.50 with slippage. But if we could get something even tighter and then break out of that flag, this would be perfect. Now, again, it's a long-legged doji. You're not there yet, but a couple key things. One, earnings are behind us. Two, we just talked about this. See how you're not filling in the gap on volume? Look how the volume is starting to pick up, and you're starting to see more above average volume. And it's been a long time since we've seen that. We've had 2 weeks above average volume. You had it in May, and then you could see how that volume kicking in eventually, we bottomed out there and started trading higher. Could see something very similar here. We've talked about this short probably since about, I don't know if it was right around the 106, but we've been talking about this since about 100 if you've been following these videos and if you've been paying attention to the Twitter feed. If you don't, you may want to subscribe to the Twitter feed, but also make sure you subscribe here because I'm going to start posting more and more charts. Let's get into this. Why would you still look at shorting this? Well, the company came out and said, we're not going to discuss our outlook anymore. Okay, this is the exact opposite of what you want a company to do. They're basically telling you they're not going to be transparent anymore. When this happened and they did that secondary, as you recall, and they announced that on the earnings date back here, right? And they do that secondary and then the stock gaps down. Right? Then they place the secondary, stock comes back up. Well, they did that bond offering with Apollo, and the bond offering was like 11 or 12%. It was against their key assets. You know, we call them death spirals, right? They're basically vulture bonds because all they're going to do is put you in a position so that when you go through bankruptcy, you have a say. And that's all those bonds were set up for. So that was a pretty big red flag for me. And you're not really going to know that unless you understand, how that game works and how they get the private equity, the right private equity people in case they do wind up going bankrupt. I think at this stage in the game, if you don't think that this is going bankrupt, you're not listening to the conference calls. You're not understanding their business model doesn't work. I can go on, but all you have to do is just go read their 10K or 10Q. There's just really very little hope for the space. You know, if you have an inventory and you're losing money selling your inventory and now your inventory is declining, it just exacerbates the situation, right? And if we just take a look at this on the weekly, just get a better perspective of it, you can see you've just completely and utterly broken, right? You're below the pandemic lows. You're not anywhere near there. So as you go down, I mean, you're basically going back to like the IPO price, and I don't think you're going to hold that. Comparison of where could this get to? Well, this was another one people said, oh, this will never go out of business. Same exact business, only their name is Vroom versus the other one. I know people will comment below about this that, yeah, they're completely different companies. That's fine. This one's at 88 cents. Okay, and it came public back here, right, at 40. Okay, so it took about 2 years for this to happen. This takes time, and you always get an opportunity like here in the 50s, which we had a great opportunity to get back in. When you're shorting these kinds of names, you need to have a system in place, and you have to realize that this can happen, so you always want to hedge. Usually I hedge, like I had my entire position on, but what I did with it is I just married calls to it. And if it didn't do what I thought it was going to do, the calls just would have stopped me out, and then I would have locked in my profit, right? But everyone trades differently. That's just one way to trade them. But focus on that. Also comment on what I just said there. If that's something else that you'd like to see more videos on, about how to marry calls to short positions or marry puts to longs, let me know, especially going to earnings. I've done quite well with that strategy over the years on both sides of the fence. So maybe it is something to do a video on, but just comment below. Let me know how much interest is in that. Let me just, one more thing. I do think this is a zero, and I don't think it's hyperbole. And I do think it's going to take time. And even from this level, it could take another year. You know, this could take time. So just keep that in mind. Higher interest rates and a stretched consumer and personal savings at, multi-year lows, none of that helps Carvana, despite their business model. Now, Apple, what we're seeing here is we're seeing a clear break of the upper channel. If we just put something very simplistic in as a 50 and a 20 to get a sense of it, we already know we're below the 5 and the 10. You can tell that just by looking at it, right? So we're not going to cloud the chart up. We're going to look at our trend line, the break of the trend line, the failure of the 20, And then we're just going to watch what happened the next day and how we just constantly fell right apart, right? Now, what they've been doing to us is causing us a lot of stress, right? And everyone's seeing it. We're getting stopped out left and right. What they're doing, and this is what happened in 2000, 2001, a lot more than in 08, 09. But they were running us back to like key levels, sometimes triggering those key levels and then reversing. So what they did, imagine you go home and you are short and you're high-fiving yourself because you're going to have a great day tomorrow, and then you come in and all your hopes and dreams are smashed because the stock's at 42.5. The goal is that you're going to have to watch these levels and how you act at these levels. So if you took the position off, right, you just put the position back on when it gives you a signal, okay? That's all you do. We shorted this in the trading community today right off the rip, and it was just a beautiful trade, and it worked out very nicely. We didn't really hang around for any of this. We got out about here and down here on the remainder and just scaled out the entire time. So the trade worked really well for us. But the purpose of showing you that is know where your levels are, because if you have your levels marked off ahead of time, you can act on them. Now, this is in here as an idea because I don't think this is done. I've got a gap down. I've got this wick because people wanted to go flat because they made so much money. So maybe what we're going to do, maybe we might trade back up and then turn around and start rolling again, forming some kind of H. But we came right to this level and we held. I'm not so sure that's what we wanted to see. I would have much rather have seen some kind of undercut than forming this huge H that now is just sitting there, right? It's kind of a wonky H, but it's there. So I'd be a little careful here. I'd be really careful here. And I'm still going to be shorting this right now. I'm definitely not going to be looking at going long. And we have to look at names like this. So this TK has been a great trader, right? You get in, you get out of it. And we'll show this on the weekly before I show you the way that I'm going to play it. But look, 1, 2, 3, boom, breaks out. Is it over? I don't think so. And I'm just going to show you this because I thought this was pretty fascinating. So I'm a big believer in upper channels. And I use them a lot because when you flip an upper channel, what happens with the upper channel is that it sets the tone. So some people use support and resistance. Other people think that upper channels are junk. It doesn't really matter what people think. It matters what they make money off of, right? If you believe something works, then it works. It's that simple. Maybe that's why technical analysis works, or maybe it works on its own. Conversation for a different time. Purpose is, you see the line right here? Bonk, couldn't close over it. Bonk, couldn't close over it. Okay, wicks are what? Price rejection. Where did we stay all day trading in this? From open, when we gapped up, to close, where did we stay? We stayed above the upper channel for the first time. Now, today might not be the execution bar. You might want to see this consolidate, but this is saying, hey, if I can stay above this and make that higher high, when you flip upper channels, you have the ability to go parabolic. So this has that ability to do that, and this is definitely something that I will have on my radar and be watching. To fit in that theme, we have a tanker, we have coal. You're starting to see people kind of catch on to this like, hey, we're going into winter. You kind of wonder sometimes if people actually understood this trade. But hey, we're going into winter. Now, this one, out of all the other coal names, this one made the most sense to me because I broke out and I held up here the highest, and I have an enormous base. So I've been basing on AMR now for almost since June, just straight across if you take a look from here down, and now we're breaking out. And you have this beautiful upper channel right here. And you should be able to see that. But let's just draw that in. And I could draw that a little bit better. But you get the idea. You see the line. Every time you came out of that, you kind of bonked. But you could get up there. This can move. This could really motor. Now, of course, you have earnings. So you're going to have to see how earnings play out. And then you're going to have to go from there, right? You're going to have to be careful. November 7th. And you're going to want to watch that kind of stuff. For me, I think that's really important for me to really hammer home. Now, in regards to that space, focus also on the names that have come out with earnings that are in that space. Schlumberger, Halliburton, they all got hit, had earnings, and then people realized like, oh, hey, these earnings weren't that bad. So you've had a position here on something like Schlumberger where we break out, we form a flag, we try to break out of the flag, retest down here. Let me draw that a little bit better, right? Comes up, bonk, 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 and then goes. Okay, that's exactly what you want to see, right? Higher lows, higher high. Today's action could be any reason, but it gives you a perfect entry and it gives you a perfect stop. So I would put this on my radar. If you take a look at this on the long-term chart and look at this over a monthly, look what's going on here. Am I going to build a monthly flag and I have a 2050 crossover? So, here's a 2050, right? So when you start looking for these, right, you had one for a moment and that's pretty much it. So when's the last time that you had one that looked similar to this? It's back here in '05. Okay, this went on a multi-year run. This is a monthly chart. You could be stopped out. It does not mean the trade's over. It just means you might have to find another spot to re-enter it. Also focus on companies that are coming out and absolutely crushing earnings. Companies like ELF. Now, if you look at something like this, this is staggering to people that you are at all-time highs, right? Look at this base, look at the break of that base, and look at how it moves. Throw in the data, and you can see that you're just earnings, more earnings. So for whatever reason, their products are selling and they've got it together. And you probably should be looking at these one-offs anyway, that where people, your closest competitors, Alta, but not really, right? So when you look at things like that, you really should be paying attention to them. Now, this is not ready for prime time. Our hope is that by Wednesday, Thursday, we form some kind of flag and then break out of the flag. But this should definitely be on your radar. Look at the amount of volume that came in. And then you kind of scroll through here and go, well, when was the last time we've had volume like that, right? And you go back 2 years, just drop a line and go, well, we really have not had any volume that's ever really been greater than this level. And that's pretty substantive and something that I definitely keep into account. Now, biotech's trying to hold in here, but this is what I'm talking about that we're looking for ELF to do, where you get to a position where you form a flag. See how that flag's forming? See how these higher lows are forming? I'm not crazy about this bearish engulfing, but Friday today, I'm surprised anything held considering, how much uncertainty is out there, and midterms are next week. So that's going to wreak havoc on the market as well. But if you take a look at this, you're wedged in there. So you have a beautiful flag that you're setting up. Look at your volume and how your volume's spiking. Okay, this is the kind of thing you want to see. You're seeing it after earnings, and you're still seeing accumulation after earnings, which is exactly what you want to see. Take a look at this on a much longer term chart. This is a monthly. Okay, so this is really simple. This is a W, right? You should be able to see that. We'll just draw it in so you can kind of get a sense of it. Okay. And then kind of go from there. All right. So there's your W, and I'll just move this down so you can see it. But now all we have to do is just get above here and you're good to go. Now, I'm not suggesting you wait for that. I'd be more interested in buying it off of this break and then going from there. That would make more sense to me. Now, in regards to the indexes, I'm going to clean this off. If you don't get the newsletter, there is a link in description to get the newsletter. There is also, if you're interested in the trading community, it is currently closed, but there's a wait list. And if you're interested, just click on the link in description for the newsletter. It'll say newsletter and wait list, and then go from there. You can just pick one or the other or both. It's just currently closed. What we're seeing here is we're seeing this declining 50. We're trying to hold on to this 20, and we're not really doing a great job, are we? So we're going to have to watch how this plays out. Now, the SPY should be able to hold a little bit better, right? This should hold a little bit better in here than the NASDAQ, okay? I have gone over this ad nauseum, but we will do it again. So when we broke down in 2000, which is the closest way that we could look at this, it took 8 years for us to come back, right? So at the end of the day, when you break down here, you're holding this level. You are holding this level. This is your 50-month. You held it during the pandemic. You never closed below it. Okay. When did we close below it? The great financial crisis. Okay. .com. If we break here, you're probably going a lot lower. So the hope is that that doesn't break, but you want to keep that line as your line in the sand. Okay. Now let's take a look at the Qs. Same thing, same soup, reheated, but here's the NASDAQ, and it took 16 years to come back, not 8. Why? Because it's weight more in tech and biotech that high beta names do not do well coming out of recessionary times. It's just a fact. Okay, small caps lead. Think of a boat, it's quicker to turn that boat around, right? If it's a smaller cap name than a larger cap name. If you think about it from that perspective, makes sense, right? Who can make more changes to the business, the convenience store or Walmart? The convenience store can implement changes faster because they're smaller. That's all. Just think of it that way. I don't like this, but we are not there. We're just beginning the month. But you're going to have to watch this and say, hey, are we forming a bear flag after an H on the NASDAQ? Because that's what it sure looks like to me. And that might be something that we have to think about as to why are commodities moving so fast today? And please don't say it's because China's going to open up, because it doesn't really matter, right? That's not really what's going to do it. I actually comment below on that. Why do you think that we're seeing commodities move so strongly today? Gold, copper, it's kind of crazy, right? The move that they have. But if you take a look at this, this is not ideal by any stretch. Now, the smaller cap index is the one that's really been hanging in there. If you look at this on the daily, you are above your 50. You are above your 20. Take a look at this on the monthly. You are holding that 50 month. Now, I want to really hammer this point home. When we broke in 2000, it took 3 years for IWM to come back. So IWM took 3 years. SPY took 8 years. NASDAQ took 16. Where do you think you should be positioning yourself? Small to mid cap names. We just went through a litany of them tonight, and we also went through a litany of possible short ideas. So if you found this helpful, please like it. Please subscribe to the channel. And any questions, please reach out. And I do read and respond to every comment. It just takes me a little bit of time because I am a one-man shop, and it's going to stay that way. So that's it. Trade to win this week.